April, good to see you. The Dow and the S&P hit record highs, but how long will this rally run? The S&P recently crossed its January 2022 peak, fueled by investor optimism and signals from the Fed that we will start to see lower interest rates. In the third quarter of 2023, the market experienced a record downturn, and now we're seeing these record highs. What's going on?
Good question. And everybody's asking themselves that every day. But,
Yeah.
just to really simplify the matter, there was bad news that was expected. The news that started coming out, employment reports, et cetera, were not as bad as anticipated. And then the news just kept getting better and better. So I think because 2023 was such a strong year overall, people had started to kind of take some of their gains as well in anticipation of bad news. And then that did not happen. We continued to get some strong news about the economy. The concern about a recession in the immediate future was allayed again. So far, good news. And we're seeing a shift, of course, as well in consumer sentiment. The consumer has remained very strong. We've seen one of the biggest shifts in recent memory, as a matter of fact, in consumer sentiment here recently.
I'm glad you brought that up, April, because I do want to point to that. As you mentioned, it surged 29% since November. That is the biggest 2-month increase since 1991. Are investors starting to believe what the experts have been saying, that the economy is actually doing well?
It's interesting because if we look at human behavior, it's often the opposite of what we would do if we had a crystal ball. Consumers are often a contrary indicator. So a lot of times, by the time that people get comfortable, they've kind of missed the rally, so to speak. A lot of that growth has already happened. They're becoming a bit more complacent, a bit less fearful, and they're starting to almost even trend towards a euphoric feeling that they don't want to miss out and they want to get in. So a lot of that emotionally is what we're seeing right now. People are starting to do, and they've missed quite a rally in 2023 from the losses that we came off of in 2022. So right now, the consumer is very strong. House values are up. Net worth overall, partially as a result of that, is up. The consumer is remaining strong. But when we look at certain studies, we see that's not always a great indicator of maybe what we should be doing.
So I'm glad you bring this up again, because let's talk through this investing cycle of emotions. We see this rally happening. We want to jump in, but this is perhaps the point of maximum financial risk. Or do you think there's more room for this rally to run?
I do think there's more room for it to run, but I would say that it's a time to proceed with caution. We have indicators that we're looking at specifically targeting about April or May, where we might start to see a little bit of a shift. We are, of course, also in an election year. Headlines can be very emotionally charged, and we'll often see the market move very emotionally in election years in particular. But there are some great studies out there on this. The Dow Bar study is one that I've tracked for quite some time, that's published on an annual basis. And if we had that crystal ball, that proverbial crystal ball that I alluded to a moment ago, then what we would do is, of course, buy when something is at its lowest and sell when it's at its high. And human nature is exactly the opposite. As that chart did a wonderful job of illustrating, that people often sit on the sidelines out of fear and when things are starting to go better, and then they get euphoric, they buy in once the high has already passed or at least gotten very close, and then they sell when they become fearful again. So it's really important, despite what trends we do see develop here in the next couple of months, to make sure that we maintain a disciplined investment approach that is not emotionally driven, not opinion driven. That's a hard one in an election year sometimes.
So keep out that crystal ball, because my next question is, do you think we will see a recession in 2024?
If only I did have that crystal ball, and I don't. And the pundits are arguing about this, and they have been for months, if not a year or more at this point. We're getting really close to a tipping point. The way that I look at this is the Federal Reserve is walking a tightrope, trying to continue to balance inflation and a recession, making sure that they have inflation controlled, tapered in the manner that they want to, but without sending us into a recession. They're still on a very fine line in that regard. Now we're watching some additional developments. For example, the slowdown in China that could trickle into the United States as well. So that's one of the indicators when I mentioned that there are a couple of things that we're watching very closely alongside our Brookstone Investment Committee for this spring to make some potential portfolio adjustments that are very well thought out and designed for these changing conditions. We might see some opportunities in some bond categories that we haven't seen in the last 2.5 years or so here since bonds peaked and have been pretty volatile since 2020. So all of those are areas that we're really closely watching so that if or when that time does come, that we're taking advantage to the best of our ability of those conditions.
So what other risks or opportunities are you seeing in 2024?
Well, small caps right now are another area that we're watching very closely, significantly undervalued. There are some, the yen is 40%, down 40%. So if we want to get a little bit more speculative about it, there are some areas like that. I mentioned bonds a moment ago. We utilize a lot of fixed income alternatives like structured notes that have a very, appealing yield for people to take a look at with a 30% buffer on the downside, that there's not a risk to principal unless there's a decline in one of the underlying indices that's 30% or more. These become very attractive instruments when people start to become concerned, even if it's just short-term volatility, and making sure that we're adequately monitoring interest rates too, because there are a lot of short-term, very conservative type of instruments, even money market, that can be a good fit for some folks right now for the short term.
Interesting. All right. Well, if somebody would like to talk through these headlines with you, April, or if they're maybe interested in rebalancing, how do they reach you?
You can call either of our offices anytime. And the other way you can reach us is through the contact us portion of our website on theretirementfamily.com.
All right. April, thank you.
Thank you, Erin.